Most people lose money in crypto not because the market beat them, but because they beat themselves. And if you can understand that one sentence, really sit with it, you are already ahead of 90% of the people trading right now. Let me tell you something about patience. It is probably the least glamorous word in the entire crypto space. Nobody makes a viral tweet about waiting. Nobody posts a screenshot of the trade they did not take. But those are exactly the moments that separate the traders who are still here 5 years later from the ones who blew their accounts in 3 months and swore off crypto forever. Patience is not passive. It is the most active, disciplined, mentally demanding thing you can do in a market that is engineered, almost deliberately, to make you feel like you are missing out every single hour of every single day. Think about what the crypto market actually is at its core. It is a 24-hour, 7 days a week, globally accessible, permanently open auction. There is no closing bell. There is no weekend break where you can step back, breathe, and come back fresh Monday morning. The ticker is always moving. The chat rooms are always buzzing. Somebody somewhere is always calling something the next 100x opportunity, and the worst part is that occasionally one of those people is actually right, which keeps everyone else chasing. That environment does not reward the impulsive. It destroys them. And it quietly, consistently rewards the people who treat it like what it actually is, a long game. Here is a concrete example. In late 2020, Bitcoin was breaking out past its previous all-time high for the first time in 3 years. The forums were electric. People were mortgaging things they should not have been mortgaging. Brand new wallets were being created by the millions. And a lot of those new participants bought in around $40,000, $50,000, $60,000. Then 2022 happened. Bitcoin dropped back to 15,000, 16,000. Those same people who had no plan, no framework, no conviction beyond price momentum, they panicked, they sold, they locked in massive losses, and they walked away saying crypto is a scam. Meanwhile, the people who had done their work, who understood what they were holding and why, who had sized their positions in a way that let them sleep at night, those people held. Some of them bought more. And by 2024 and 2025, they were sitting on life-changing returns not because they were smarter, but because they were more disciplined. That word, conviction, is worth unpacking. Because there is a version of conviction that is just stubborn denial. That is the person who holds a dead project to zero because they refuse to admit they were wrong. That is not conviction. That is ego. Real conviction comes from research. It comes from understanding the fundamentals of what you are holding, the use case, the team, the tokenomics, the competitive landscape. When you have done that work, a 30% drawdown is not a crisis. It is noise. It is the market doing what the market does. But if you bought something because someone on social media said it was going to the moon, then a 30% drop is going to feel like the end of the world, because you have nothing to anchor to accept the price. And when the price goes against you, you have nothing left to hold on to. This is why having a plan before you enter any trade is not optional. It is the whole game. Where are you getting in? Why? What are the conditions that would tell you your thesis is wrong? What is your position size relative to your overall portfolio? What are you willing to lose on this specific trade, in absolute dollar terms, without it affecting your ability to think clearly? If you cannot answer those questions before you click buy, you are not trading. You are gambling with extra steps and a fancier interface. The plan is what keeps you from making decisions in the middle of the storm. Because I promise you, when the market is moving hard against you, and the red is everywhere, and everyone in every comment section is screaming that it is over, that is the single worst moment to make a decision. And it is the moment most people make their biggest ones. Let me give you another example. A trader sets a stop loss at a specific level when they enter a position. The trade goes against them. The stop triggers. They take the loss, they move on. That is the system working. That is what a plan looks like in action. Now take another trader in the identical situation. The trade goes against them. They look at the stop loss and they think, you know what, let me just move it down a little. Give it some room. It will come back. Maybe they move it twice, 3 times. And then the loss that was supposed to be 2% of their portfolio becomes 15%. This is not a hypothetical. This happens every single day to thousands of traders. And the only difference between those two people is not intelligence. It is not access to information. It is discipline. It is the willingness to follow the plan even when every emotional instinct you have is screaming at you to change it. The market is very good at one specific thing, and that is making the wrong move feel like the right move at exactly the wrong time. When prices are going up fast, buying feels obvious. When prices are crashing, selling feels like the only rational response. But if you look at historical data across virtually every major asset, the people who bought during the deepest fear and held with conviction were the ones who eventually came out ahead. That does not mean every dip is worth buying. That does not mean you should ignore risk. It means that if you have done the work, if you have conviction in what you are holding, volatility is not your enemy. It is your opportunity, but only if you are positioned to take advantage of it rather than being forced out of trades by panic or by poor position sizing. Zoom out. This is one of the most underused tools available to any trader. When you are looking at a 1-minute chart, the noise is overwhelming. Every candle feels like a signal. Every wick feels like a threat. But zoom out to the weekly, the monthly, look at where we are in the broader cycle, look at on-chain data, look at where institutional flows are moving. Suddenly the picture is completely different. The chaos resolves into structure. The things that felt urgent 5 minutes ago look tiny. This is not about ignoring short-term risk. It is about not letting short-term noise overwrite long-term signal. The traders who have been consistently profitable over multiple cycles are almost universally people who have learned to hold both time frames in their heads simultaneously. They know what is happening now, and they know what it means in the context of where they believe things are going over the next 1 to 3 years. Here is what patience actually costs you in real terms. It costs you the ability to brag about the trade you just made. It costs you the dopamine hit of constant activity. It costs you the feeling that you are doing something, that you are engaged, that you are in the action. Those are real psychological costs. The market does not care about any of them. The market does not reward activity. It rewards correct decisions. And sometimes the most correct decision you can make is to close your laptop and go for a walk because the environment is not giving you anything worth acting on right now. The best traders in the world are incredibly selective. They have criteria, and if the market is not meeting their criteria, they wait. Not because they are scared, because they know that forcing trades in bad conditions is just paying the market for the privilege of losing money. One more concrete picture. Imagine two people with the same starting capital and the same basic market view over a 12-month period. The first person trades constantly. They are in and out, they catch some winners, they catch more losers, they pay spreads and fees on every transaction, they make emotional decisions after big red days, they add to losing positions, they cut winners too early because they are scared of giving back gains. By the end of the year, they might actually have had the right big picture view and still lost money. The second person makes a handful of high-conviction trades based on clear setups with clearly defined risk. They wait for the market to come to them. When it does not, they sit in cash and they wait some more. At the end of that same 12 months, they are almost certainly outperforming, not because they worked harder, but because they let the process do what the process is designed to do. That is the whole message if you want to distill it down to something you can actually carry with you. The market does not owe you anything. It does not care how smart you are. It does not care how much time you spent watching charts. It will pay you, but it will pay you on its timeline, not yours. Your job is to build a process that is sound, to size your position so that you can survive being wrong, to have enough conviction in your thesis that you can hold through the inevitable noise without abandoning your plan, and then to wait. To be genuinely, stubbornly, relentlessly patient. Not because patience feels good. It often does not. But because the data is extremely clear, the emotional trader bleeds out over time, and the disciplined trader compounds over time. Those are the only two outcomes this market offers at scale. Discipline beats emotion. Every single time, in every single market cycle, without exception. When you feel the urge to chase, discipline beats that. When you feel the fear that tells you to bail at the bottom, discipline beats that too. When the greed kicks in and tells you to ignore your exit plan because surely this can go higher, discipline is the only thing standing between you and a lesson you did not want to pay for. If you want a system that applies this kind of structured, rules-based thinking consistently, without the emotional interference, without the impulse decisions at 2 a.m, that is exactly what Vishmaster is built for. The automation running at Vishmaster Live is designed around these principles: patience, conviction, process.
No hype. No shortcuts.
Just a framework built to keep discipline in the driver's seat when emotion wants to take the wheel. Check it out when you are ready to trade like the patient trader who always wins.